Okay, welcome to Commodities, and here we're looking at gold on the 4-hour chart here. And as you know, the target that we're looking for is the 1300 there. I've got two kind of wave counts that we can look at going up through here. Essentially, we're looking at 5 waves, and one of them is the 1, the 2, the 3, the 4, and the 5 for wave 1, back for wave 2, and all of this being the 3rd wave. And looking for the top of the 3rd wave, a 4th wave, and a 5th wave here. But I wouldn't count on that, but it's something that we can look at. But drilling into this situation, the current count that we've had for this particular market is well, up for wave 1 here, back for wave 2 here, then the 1, the 2, all the way up for the 3rd wave, the 4th wave, and the 5th wave for the 3rd here, the 4th here, and looking for the 5th wave up through to here. Now, you know, working close to these large numbers here, there's a few things that can obviously happen. It can fail before it gets there, fails at there. It can move straight up through it, then fold back. But either way, you know, we have to expect, you know, a change in trend or a decent sized correction. So let's just drill into this a little bit further through here. Yeah, I mean, this is also here, you know, just looking at this little structure up here, I can see that we've got up for 1 and back for 2. Then we've got 1, 2, 3, 4, and 5 here for the 3rd. Then we got the 4th here, then the 5th here. So we can actually have a top in play here. And it does appear that we've got a little impulse wave down through here. So this can build further to the downside. There'll be some sort of correction pattern like this, and then another little 5 here. If it finds the 1280 as a resistance here, then obviously it's going to move down even further. But we could certainly have a top in play there. So just be mindful about that. Let's have a look at silver. With silver, we're looking at you know, wave 4 here, and we're looking for a 5-wave structure up here for wave C. So that must be pretty close here as well. So I was looking at this count of being like this here, looking for another little 5-wave structure up through here. But if this moves down through here, back into the under this 2000 here, then we can pretty much assured that, like gold, this would be in play here, and we could also start looking for shorts as well. And when it comes to looking for shorts, what we want to see is if the market comes down here, it's going to bounce off here, and you know, if it gets lower highs like this here, then you know it's weak. Then you'll see it, and you could probably short a little bit from that point. But what you're looking for is a break lower, then a move higher on lower volume, and then this would be the setup coming in this way through here, and then looking, and you can work group 2 here as well, the 65, 72, and the 80 here as adding to positions if that's the case. Alrighty. The copper market has moved up nice and strong through here, but I still have to consider it being a 4th wave here, because this move here is very much in 3 waves. So we will stay with the A wave here, a B wave here, and once again we'll count 5 waves up through here, which are kind of completing in their own little way as well. So where are we? From the low here, we can count up for 1 and back for 2. And then I was counting this in terms of up for 1, back for 2, and then the 3rd wave into here, because we've got 1 and 2 in here. Then the 3rd wave, the 4th wave, and the 5th wave for the 3rd and the 4th and the 5th wave here. But that still leaves us as the 5th here and the 3rd here. So we can get this wave 4 here. And it's normally wave 4s that break trend lines as well. That trend line's done a bit of a bunky there, but where are we? Down here somewhere. Yeah, so wave 4s with Elliott tend to break the trend line, so just be mindful of that. But yeah, look, what we're looking for here is you know, some type of correction, and then a 5th wave up there to complete that section there. So a little bit more strength in the materials yet, and that's showing up in BHP, Rio, FMG, and AGO went for a bit of a goer yesterday. The oil market is, you know, it's sticking to the 100 now. So with that in mind, you know, we may have to look for a top being in play here as well. And this has all got to do with, you know, partly well, oil follows stock, but also the US dollar and the bonds have got to come into the play as well. But I was also thinking through here as well is that, yes, we can have a top, we can put that there, but there also may be another one more little push to the upside here before we get the top of the whole 5-wave structure up through here. But as it counts at the moment, how we have been counting it is from wave 4 here, 5 waves up for 1, back for 2. And then for the third wave up here, looking for 5 waves, we've got the 1, the 2, the 3, the 4, and the 5 for the third, and ABC for the fourth, and then 1, 2, 3, 4, 5 here for the fifth. So once again, we can also have a top in here as well. And, we're getting a lot of markets like that. The Australian dollar, lost it then, but there's a lot of markets that are possible turning points, so we need to be mindful. Also, soybeans here is a turning point as well. What we've been looking for here on the daily basically is 5 waves up through here and then an ABC back through to here. I'm quite confident this will be a corrective back and then a move up because we made new highs above here. So just drilling into that here. As you know, yesterday I think that we were looking at, we'd been working through here to the 5th wave here, and then we were looking for, we had wave A come down. Yesterday I think we were in here somewhere, and yes, the B wave has moved up through here and maybe even taken the top out there, orthodox top, but we're looking for wave C to come back down, and that's what we were looking for, and that's what's unfolding. So we can count that, downwards. How far will it come down? I don't know. It depends what news comes out of the gates and what the US dollar pushing up is really putting pressure on the commodities. So it could come down to 1310, 1300, even the 1290, as I said a little while ago. So we just need to allow this to play out now. If we look at the US dollar here, one of the things with the dollar here is that it does appear to be up in 3 waves. That's corrective, but we could only really confirm that it's finished as a corrective pattern if it moves below this one here, because this could be up. Yes, it could be an A, B, and a C, but it could also be up for 1 and back for 2 of 1 degree, and then the next degree smaller, it could be up for 1, A, B, C, back for 2, and then push up from that point. So it's really only this low here, if that gets broken, that would confirm this being an A and a B and a C. So this is something to watch, and we should at least at minimum see a little 5 waves down here, which I think we've got already, and then we'll see a little A, B, C back up, and then we'll see another little 5 waves down like that. So it still may be just the A, the B, and the C, and push up from that point. So we just really have to wait, to see if it does continue down through here. So it is working itself into a corner. But this will be a real game changer. If we start to get 5 waves up here, then those commodities are going to turn. So when we're looking, especially wheat, corn, and orange juice, so when we look at wheat, for instance, just on the weekly here, we know that the 600 is resistance, the old supply levels here, but also too we can see that the weekly bars that are moving up here, they're on lower volume. Yes, fair enough, we still got Thursday and Friday to trade through on this bar here, but they're not really showing us strength to the upside. We're getting price up, but we're not getting volume up. And we see that the sellers in the market here, even though that the bulls are chipping away at the supply level, which is good. But, there's a real battle going on there under the 600, and it can fail. So you need to be mindful of that. This is the daily situation here. We've got this bar yesterday here was up but on low volume, so a bit of weakness there, and then we've got this bar here overnight which is closed lower than the open and on higher volume than the previous day, so that's a sign of weakness here as well. So this move here can be an A and a B and a C here and fail here, so you need to take that into consideration. So the Elliott count here, we've got up for 1, back for 2, then up for 1, an A and a B and a C, back for 2 into the 580, and then pushing up from that point there. That's our count to the upside, but we have to look at both counts, and as it stands, we've got 3 waves up here, so it can be an A and a B and a C and completing there, and then move all the way down. Once again, this low here would need to be taken out here. But if the 572 became the retested resistance, then we need to exit from there. So we can bring stops up to the 569 sort of area in here, but you may want to lock in profit now because there's turning going on in the market. And the same for corn as well. A weekly chart here. We've got, we're not, these moves up here, we're not really seeing, we're seeing those two bars here are on lower volume here. Well, this one's lower than that one anyway. So it's a sign of weakness here. We knew that we'd see weakness at 450. We expect some sort of correction sort of in around there. The move down through here so far is quite good because it's on lower volume. But if it finishes Thursday and Friday and higher volume than this bar here, then you know that we need to be out of that market. So we can bring the stops up to this point here. But if you're really keen, you can bring the stops up to here. But if you're going to bring the stops up to here, you might as well just get out. Let's just have a look at this here. So this particular pattern here is really the same story as well. It's up in 3 waves here. Okay, so I thought there was going to be another little push here, and then there certainly may. But if you see this, if this moves down on top of wave 1 here, then on top of 430, then it's weakness, and you should be out of the trade by that point. Okay, that would be a good way to do that. But as it stands at the moment, we were looking for an A and a B and a C for wave 4, and we know wave 4 can get a bit ugly, but this move here is in 3 waves, so that makes it that this low here will get taken out here. So you may want to bring the stops up to 435.96, for instance, to protect that, or even getting out now, so to speak. The orange juice is the same boat as well. We've always known that it was a bit of a guessing game with wave 2 being in play here, and it may be right. I just don't know. But the main point here is that we have this 3-wave structure to the upside, so it can be corrective if this low here gets taken out of play here. The real trade here has always been support on the 150, so building in positions above the 140 here was a risk, and is to keep position sizing very small, but you could bring the stops up to the low of this bar here now, just to keep it safe. Right, well, that's it. So just to recap, it's really got to do with this US dollar. So just keep an eye on this. So it will take another session to do a little B wave and a C wave here. Then you need to see it move up or down from here, and then you can make your decisions from that point. So you could probably put a little trend line in here as well, so to speak, and it shouldn't really break that trend line. All right, thanks for listening.